Hey everyone, I'm Jen. Thank you so much for tuning in to Blockchain Banter. We missed you last week, but we are here live from Dubai, actually, following ETH Dubai. And I have not been following the charts, the market at all. So I'm glad to have Keith Allen here, co founder of Material Indicators, TA, algo trader, order book analyst. All of the above, ready to fill us in, share with us his fire charts, his indicators, everything interesting that he's been seeing going on. And Dr. Mark Richardson, project lead at Banter and Carbon DeFi, here with us as well. Thank you guys so much for joining me and
thanks for having me. And world travel, world travelers, both of you. Mark, I haven't seen you look this refreshed. Oh, look at that.
Thank you. I needed to make myself presentable, you know, when I'm facing the public again. But I'll be disappearing behind my computer screen again for a few weeks.
How's it been going?
I'll let my beard grow back out.
How's the event been for you guys?
It's been really good. The conference in Dubai, despite the weather conditions that threatened to stall it, actually went off extremely well. And compliments to the organizers, who I think put on a really good show. And the people that attended were a phenomenal group of people. We got a lot of really wonderful comments about the product, and there's a lot of super interesting stuff going on. I think it's a good time again to be in cryptocurrency. It's the people that are actually doing important things are making moves again, and that's always good to see.
That's good to hear. I want to hear more about that. While you were gone, you're still gone, Jen, you said you haven't seen anything. So
I haven't. It has been back to back, so busy for the last week. So I've been looking forward to this call because I check in, I look at what the current price is, and then I just kind of check out. That's the extent of what I've been doing. I mean, in terms of the charts.
So you missed a little something. There was a little event, and I'll go ahead and share my screen. If you can let me in. We had something called the halving. You might have heard about it. It's been all in all the news.
What's that?
So it's interesting that as much talk as there's been about the halving, that a lot of people still don't really understand what it means, right? And we say, oh, it's going to limit the supply. And then there was a debate, or a question, I should say. It wasn't a debate. Somebody questioned whether is it really limiting the supply? Well, the Bitcoin is capped at 21 million, right? That part doesn't change. What it limits is the daily supply of freshly minted Bitcoin that is available, potentially available to the market. And where that really matters is in the basic supply and demand model, right? So, we know that initially out of the gates, after that first sell-off, the ETFs have had an enormous amount of demand relative to the daily supply. And at the time, when Bitcoin was, when miners were able to mint 6.25 Bitcoin a day, and daily demand on the ETFs alone was 10 to 12x that much, well, then conventional wisdom would say if that demand stays the same and the supply cuts in half, then we have now 20 to 24 times demand to supply. Well, the demand has not stayed the same. And that points us over to the ETFs, which last week had 1, 2, 3, 4, 5 down days in a row. But what's interesting here is, we know that Grayscale has been on this, perpetual distribution from their clients, and they're in a different situation than the other ETFs. And BlackRock has been nonstop buying. They haven't even had any down, not only no sell days, but no 0 days, no days where they were absolutely flat. They've had some lighter days, but no flat days. And so, which you can't say the same for some of the other entities. And there's nothing wrong with that. To me, that just kind of illustrates that the market is maturing, right? There was initially, we had 10 years of pent up demand waiting for this ETF, and that's why we saw such heavy inflows. And now it's leveling off. I don't think the demand is going away whatsoever. In fact, with recent decision in Hong Kong, I think we're going to see demand, institutional demand, increase again. So, plus we'll have additional waves of demand coming from the U.S. once these second wave, if you will, of institutions come in and the wirehouses come in and into the mix too. But those guys don't move fast, right? They're not nimble. They don't move fast. They do their diligence. They take a long time. They're fine buying Bitcoin at 50 grand, 60 grand, 80 grand. They don't care if they think that the long-term price is going to take them, to 300 grand or more. Also, interestingly, you can see that the Grayscale daily flow, this is outflows, maybe, just maybe, they're trending down a little bit. Okay, so we still have days where there's spikes, but it looks like they might be starting to trend down a little bit. They've had just an insane amount of attrition, right, since the beginning. At some point, this has to level off. I maintain that I think the entire time they knew exactly what they were doing with those 1.5% fees. They've made hundreds of millions of dollars by capitalizing on that, right? A lot of those holders, different than all the other ETFs, a lot of these holders, most of these Grayscale holders were ported over from the old Grayscale Bitcoin Trust, right? And their coins were locked up. Some of them invested, as long as 10, 12 years ago. Some of them came in more recently, but they were all locked up since the FTX crash. So waiting for that to happen. So, those guys are in profit. And I have no problem with anybody taking profit after a run like that. And maybe some of them poured it over to some of the more economical, more competitively priced institutions. I don't have any data on that, but I'm just speculating. These people aren't out of Bitcoin altogether. They're not out of the ETF game altogether. They just got out of Grayscale. So now let's take it over to the charts. And on the charting side for Bitcoin, we've had, interesting times up here where we just could not get anything to stick above 69K. So this RS flip never validated above 69K. We had all this weakness here, but we had a series of higher lows, starting with this 59K level down at the beginning of March, and then a higher low and a higher low. And it looked like, the bottom, the floor was moving up, right? We said, oh, maybe it's going to be 61K is going to be the bottom. And then, a little while later, it came, okay, maybe we're moving up to 65K. And then this is where this is where the drone strikes happened in the Middle East. We had a breakdown, and price retested this level and still held, right? So we've annihilated these first two lower lows. Losing the third one is the bad one, because we have nothing left other than to go down into this 50 to 52K range. Still, what's the sentiment there? And we'll look at FireCharts and see how liquidity stacks up to this, right? So let's look at these levels here. Strong technical resistance, as you can see, happening at the moving averages. The green is the 21-day, red is the 50-day. So the red is about 67.5. The green one is here at about 66.5. And then, of course, we got to get above this 21-day, this 2021 top at 69K to have a chance to go back after this new all-time high and start printing new all-time highs. And a lot of what I've heard after the halving was, halving happened and it was a nothing burger. What the fuck? Well, if you thought it was going to go straight up right after the halving, you really haven't been paying attention. Okay. We could consolidate here for a long, long time, and I'm speculating, now I'm seeing what looks like could be a bull flag developing. It's almost easier to see here on the weekly, but this could be a developing bull flag here, right? If this was the flagpole, and we took the top of the range and the bottom of the range, this is a potential bull flag. And yes, we could maybe make that a diagonal line. It doesn't really matter at this point, right? If this were to happen, and now this gets a little speculative, right? Because this hasn't fully developed yet. But if this develops, continues to develop as a bull flag, and we got a breakout, the measured move from that breakout would get us up here around that 107,000 mark, right? Nobody would argue about that, but there's so much that has to happen before we could even consider that, right? And that is, namely, clearing these moving averages, validating an RS flip above the 69K level. Then we go after the all-time high, the new all-time high, and start building up in here. And we've got to break into this channel, of course. So now, in terms of where the liquidity sits, we'll take it over to FireCharts, and I will first zoom out a bit and give us some perspective. We've talked, I think we talk every week about the amount of liquidity that we need to see, or that we're accustomed to seeing before a big move in either direction, right? And we're talking about the deeper concentrations of liquidity. And as you can see, historically, we have large blocks. Okay, this was 96 million and another 93 under it, and another 58 under that. And so this ladder was ultimately over 250 million, and price moved away. This block was 134 million, and price moved away. It works in both directions. So what we have here that's positive is we have a nice ladder of depth, showing liquidity down to the 50K range. But what we don't have yet is a deep concentration of liquidity close to price. And at the moment, it's been growing, and this dynamic has been changing a little bit. As you can see, the top side also has started to fade a little bit. So what I'm waiting for, to figure out when I think ultimately price does go up, right? Ultimately, I'm bullish on the macro, but in terms of timing, I can't say, oh, it's going to happen. It's going to be a May go away month, and then in June, the summer, it's going to kick off. I can't pinpoint it on the calendar that way, but what I can do is look for the liquidity, and when it shows up, and Mark, you'll remember when this appeared, I said, hey man, it's finally starting to happen. This is when you and I were both waiting for a retest of 25 and possibly 12 or 13K, and this came in, and I said, this is what we typically see. This is the amount of liquidity we like to see before we have big moves, and that just hasn't happened yet. So now let's take it in on timeframes a little bit. Over the weekend, we had a big block come in overhead to kind of suppress things. But we had this retest. Things were looking pretty good as price was grinding its way back up over the weekend. Relatively low volume, by the way. But this block came in and pushed price down. And, I wasn't sure if this was just to suppress price for a red weekly close, or if this was one of the institutional entities trying to suppress price before the TradFi markets open and they could start ETF buying again. Whatever the case, it's a roof pull, and price did move up, react to that pretty aggressively initially, and came back to pump. And now we're seeing liquidity move again, right? So now we have bids coming into this 63.5 and 64.5 range, and ask liquidity from above now at the 68K range, right? This is like the very local range here in terms of what we could do above or below that. We'll zoom out and see that we still have the heaviest concentration at 60K, but it's only 20 million at this point. That ladder looks pretty good down to 55K, and then it starts to thin out, as you get down to the 50K range. So when we see these blocks coming in like this, right, we see price react to that relatively quickly most of the time. So at this point, we have a little bit of bid support here at the 65.5 level, and these bid walls backing it up. When we have new liquidity come in like this, I'm always cautious because it can rug pull very fast. It can disappear as fast as it got to us. So I'm mindful of that, and I don't really trust it until I see it get tested, or I see more coming in to front run it. Right. So this just appeared this morning, so time will tell. But That's pretty much the long and short of it, at the moment. So I think that fundamentally the halving, of course, is a bullish event, but it's not a straight line bullish event. There's, I say it every week, no straight lines. They're not sustainable, and we're looking at that now. So in terms of the resistance overhead, this kind of has some confluence with what we saw on the moving averages on the 50-day moving average, right? Which one was it? The green one or the red one? Yeah. So the 50-day is right up there around 67.5. And this is just above that. So, and then it gets really tough once we hit to 70K. Interestingly, there's not a ton at 69, right? 69 is where it's really, the technical resistance is, but there's more here at this 70K level. And, we get to those even numbers, those round numbers, the 70s, the 75s, the 80s, those are psychological until we have some activity up at those levels.
Keith, you said that there's what, 20 million in liquidity there, right? You said it's seems a little bit low right now.
So at the base, 60 at 60K, there's just a 20 million block at that wall, but there's depth below it, right? And if I zoom out to a higher time frame, we can see it bend a little bit differently. We'll call that wall now, upwards almost 50 million in the range of about 59.2 to 60 and change. But it was stronger just a few days ago. It was at 60 million. So we want to see, in the simplest terms, we want to see the brightest colors down here. At least that's what bulls want to see. If you're a bear, you want to see $100 million block of resistance come above and knock price down. Those moves can happen without warning, right? And they often do. So that's what I'm watching for. I'm just playing the liquidity at this point. I'm accumulating on the dips and the upper ends of those positions. My highest entries, I take a little profit on the way as they hit some marks, just to keep the scale of my DCA working to my benefit.
Did that 60 disperse or did it leave? I mean, we've got 20, right? But that other 40,
So some of it,
kind of come up in smaller increments elsewhere.
A lot of it has dispersed. Now, a lot of it dispersed, right? For sure. And sometimes it moves in both directions. You can see here that this block that came in yesterday, some of it moved up, and some moved down. So they're, but it's the concentrations that are harder to break, right? When you've got a big bright wall, it's hard to break that. When it's distributed more evenly, it takes some time to grind through it, but it's not a wall per se.
Yeah. So you're looking for more of that liquidity to come in, running that.
Right. So I mean, imagine if what's down here in the 50 to 55K range, if that came and stacked on top of 60 or stacked up here at 65, we'll see price move. And by the same token, if we see another big block like this come overhead, then it's going to push price down. And it's reasonable to think that we could indeed range for quite some time, right? There's no,
that might not be a bad thing, right?
It's not I mean, for me, the consolidation periods are building strength in the chart. It's a foundation to spring, to build off of. We never got a retest here, which makes it ripe for a retest, and we never got a retest here, which makes it ripe for a retest. But we don't see any at the moment. We don't see any liquidity-based sentiment to go below 50K at this point. There's very little down here. So, I play what's in front of me, and this range, this is a large range, no doubt about it, but that's where the range is right now. Hopefully this holds.
Yeah. Well, speaking of ranges, thank you so much, Keith. I'm going to see if Mark has anything planned for us with specific ranges that he might want to show us here. So
Oh, glad to tee
thank
that one
you.
up for you.
It was perfect. I mean, we talk about ranges and stuff. We've also talked about retesting quite a bit. So it'd be interesting to see if we actually get a retest here in that sort of range that you were speaking about.
And these,
Mark, I'm going to pass it over to you. Oh, go ahead, Keith.
I was just going to say, these consolidation ranges are really ideal for what Mark has been showing us with carbon.
Yeah. Mark, what
Is
did
that
you
where
have
you
planned for us
thrive,
today?
Mark? Is this the environment that you really thrive in, you think? You're muted.
Yeah. So, all right, am I still muted?
No, you're good. I hear you.
Good. Yeah, absolutely. Yeah, things dropping sideways is exactly what I want to see when I'm trading stuff. If I'm looking for like if I want to make a really big commitment on something, I prefer the price to be trending down. And if I'm trying to exit from something, I prefer the price to be trending up. I buy on the way down and I sell on the way up, and I can do that a lot of times when things are moving sideways.
That's good.
Yeah. So, what do I have? So I'm gonna do a favor for a friend of mine, who is the essentially the sort of community manager, I suppose, for a meme token called the SPX 6900, which is a really interesting project because it doesn't have a developer anymore. So it was a token that was launched, about a year ago, and has kind of just persisted, free from any developer interference, and has just continued to build a community, and people have built sort of like NFT projects and things around it. It's just a really interesting sort of case study, especially because for a meme token, it behaves a little bit differently to sort of other meme tokens. And on the month, it's actually performing quite well. So you can see I'm just going to use this as like a measuring device. You can see on the low, it came down to about 0.2 of a cent, and then had this amazing sort of catastrophic rise about 3x. What makes this chart interesting isn't necessarily against USDC, but the fact that even versus Bitcoin, this is, again, on the month, not looking so bad. It's making higher lows, and it's also sort of consolidating in this range. And this is one of these interesting situations that when Bitcoin is moving sideways, some of the things that are very volatile and also sort of pushing its face up against resistance but still finding support on the way down. If you can find something with a very attractive volatility profile, then you can actually make some money trading it. And the thing I like about this token is that it has a very good distribution. So this is probably a concept that Keith is yet to become familiar with, because it's something that's very specific to DeFi, and very specific to, let's say, extremely risky tokens. And certainly Bitcoin and Ethereum don't necessarily struggle with this, but a lot of tokens have like a very deep, or like a very overcommitted, like project allocation or developer allocation,
Right.
or there's been seed investors that have vested bags and things. And if you're buying into that, you're generally making a huge mistake.
Right.
I generally try not to buy
I was
things that
born
have
into
had that
crypto in the
kind of
ICO
activity.
days, so I'm familiar.
Good. Well, yeah, and a lot of the meme tokens have this as well. The people that launched those token contracts give themselves an enormous allocation with some vesting period or unlock period or whatever that's still there. But yeah, this token is unique in that it doesn't have any of that. It's just it is a literally like free floating currency on the Ethereum mainnet. It's recently been ported over to Base, so you can trade it there as well. And there's a deployment from one of our licensees where you can trade it on, using this software as well. But yeah, I wanted to show quickly that even versus like WBTC, if we just look at, let's say, like I said, just the last month, even if you were being quite modest, like I'm not looking to buy this, insane dip down here, and I'm, going to ignore this this huge rise up here, and just identify that actually there is a fairly well respected channel here. And this, you can see this evolving on USDC and USDT as well. And so trading this is actually something that that you can do with some level of reliability, and you don't even need like that much. You don't need to take huge exposure to either one of these tokens in order to do this quite well. And so to demonstrate that, so we're going to take this back to the 25th of March, and we're just going to say we start with like $50 in SPX just to choose a number. And trading this against WBTC within this range. Let's make the buy range just like a little bit tighter, just so that we can really show off. Oops. The what was that? Please match the requested format. Oh, that's interesting. There we go. Just to sort of show off why is it doing this? That's embarrassing. I think I've just discovered a product bug for the first time. I think maybe if I click on that, we should be able to get there. I'm going to do it here. There we go. All right. Well, I'm kind of glad that we got that on the call, so that we can so I can show that to my head of product. But yeah, okay. So this one, I think that because we were kind of meddling with it for a little while, but you can see that over the course of this month, we only had to weather like a 5% capitulation, but between sort of the 7th of April and moving up in towards towards the 18th, so over the period of about 2 weeks here, we actually managed to move from a negative 5% up to a plus 15% relatively quickly. And again, this is measured in HODL, and like I said, it's been a good month for SPX. And so even though this is a negative 2% versus HODL versus USDC, it's actually not looking so bad. And if we go out a little bit farther and actually move these ranges to be a little bit more, let's say, aggressive with our buys. Let's say that you had bought all the way back here and you wanted to catch these wicks. And this is something that I think Carbon DeFi is extremely good at doing, because these wicks only have to last for, a block or two in order to create a significant enough arbitrage opportunity for someone to realize it and close it. So I'm going to try this one, and I'm going to have to do this again, unfortunately. There we go. I'm really sorry about this. It seems to be adding this this exponential, oops, to the end, which is something that it wasn't doing just 2 seconds ago. There we go. Okay. So now, yeah, okay. I think every time I actually do that, it's actually moving the position around, which is unfortunate. Let me do this a different way. Let's do this versus USDC and pull it out a little bit farther. Okay, so I'm moving out now to a slightly longer time frame, but basically going to be using a similar, a similar strategy. The only difference here is that you can see that there actually is a, if I draw the lines around here, you can kind of see where this horizontal channel is beginning to form versus USDC. And if you're in the mindset of actually just back testing this and seeing what everything's going to look like, then you can see that there is a you can actually place your ranges around to sort of specifically exploit how the market is observing these ranges. So I'm trying to not like bias the simulation too much by applying the 2020 hindsight. So we are going to let it sort of, the price move above our range, and we're not going to exploit this massive parabolic rise. But we're going to see, how this thing performs, even though, we're ignoring, ignoring those opportunities.
So for you, Mark, in a live trading situation,
right?
Mark, in a live trading situation, when price does move beyond your highlighted ranges, do you adjust, or you just wait for it to come back?
I'm generally so with my strategies, I'm generally pretty high conviction. If something, if I see something moving like this, I'm generally happy to say that, because I would have already sold by this point. And that, you know, so long as I have sold at a price higher than what I bought for, I don't mind.
Right. You made money.
But you know, when things start doing this kind of made money, exactly. You never lose money by taking profits. Um, but at the same time, when I do see things like this moving with, let's say, a little bit too much of like a zealous, like an overzealous momentum,
Right.
I'm generally anticipating a pretty sharp pullback as well. And you can see that this happens a lot with these kinds of tokens. You know,
Right.
the market gets really excited, and then there's kind of this hangover period afterwards. And so I don't mind letting my strategies, you know, sit in sort of this like -10, -20% state for a little while, because I'm usually convinced, and I wouldn't have set up that strategy if I wasn't, that eventually it will return to this, you know, return to this sort of trading chamber and come back there.
Right.
You can see, yeah, on this particular, for this particular meme coin, you can actually trade it versus stable coins and do fairly well. And yeah, you know, like I said, during this parabolic rise, you were sort of 40% down, but by the end of this period, you're actually up 90%. And the interesting thing here is, and I like to bring attention to this all the time, is if we just look at the portfolio value versus the HODL value, we can see that had we sold at the exact top, right? And no one ever calls the exact top. You know, I mean, I'm sure some people claim to, but I doubt that, you know, many of them actually have. But the interesting thing is that now this strategy has evolved over time, and we kept trading it. The portfolio value actually gets very, very close to the, you know, this kind of local top. And this isn't, you know, I think one of the beautiful things about learning to trade this way is that it's actually easier to build portfolio value using this kind of fading strategy than it is to try and call the top. You know,
Right.
like there's actually there's a more of a reliability. There's more of a I don't want to say certainty because nothing's certain, but I consider it to be a much more a much wiser approach to trading markets than sort of putting all of your chips down on a single number.
And what was the time frame, the range of time, I mean, for that 90%?
This 90% was 90 days. So this is making about, you know, I mean, I'm not compounding it, but yeah, it's 90% over 90 days.
Nobody's going to complain about that.
No one's going to complain about that.
And even if you did miss the top, you know, there's the difference in a strategy like what you're doing is, I think, safer, more conservative. Like you said, you're not all in at once. You don't have everything tied into one trade. You have a limited number of funds allocated to this strategy with this asset, and you let it do its thing. And if it's going to grind out 90% for you over 90 days, and the coin maybe went 124%, to me, the upside that you missed is the cost of the risk management, and I'm okay with the risk management.
Yeah, exactly right. And in this case, the most important risk management, and this is something that I feel like maybe doesn't get enough airtime, is position size. Like
Yeah.
just managing your position size. It's such a it's the cheapest form of of insurance. You know, is just investing less.
I can tell you
And
without any exceptions, unfortunately, without any exceptions, every time I start getting overconfident and I take my position sizes to the next level, you can always bet against that. You can always short me on that because I get killed every time. Every time
let
I
me
do
know.
it. So I don't do it anymore. I now have a range a range of position sizes I'll use, and if price, you know, so for example, now I'm trading Bitcoin in a range. When price is at the bottom of that range, I'll go to the high side of my position size. When it's closer to the top of my buy range, I'm going to reduce that position size so that I'm always I'm DCAing my way into each in and out of each position, and that way, my larger orders from the lower price levels help drag my average cost down.
Yeah. I think Jen needs me to mute so that she can say something.
Yes, thank you, Mark. What I was going to say was when Mark, even when you were showing that 40 or the negative, you were saying that it went negative 15% or whatever it was. That's versus a hodl position, right? So considering they started in an SPX position, right? It's their return on investment as opposed to a hodl position because wherever their initial buy-in is unknown, right? So even then, not timing the top and taking that sort of profit, that is still a profit. There is still a positive ROI in that regard, right? When you're measuring versus a hodl position, great. But I think that's kind of the beauty of this product also is that you're not trying to time the top, knowing that you're probably not going to time the top. You're taking profits at a sort of price range that you're comfortable taking profits at.
Yeah, exactly. And what I was trying to say about managing position size is that on chains like Ethereum, sure, like sometimes you need a decent position size for it to have it be taken because the gas fees are relatively high. But on chains like Base, you can if you want to set up a trading strategy with $5 in it, people will very happily and excitedly trade with you. So there's no
People will be
the
very happy
barrier
to
to
take your
entry to trading.
$5.
People will be very happy to buy $5 of tokens from you. And so yeah, like if you are if you consider it risky to trade like meme coins, like I think that's a very considered choice. But you don't have to bet the bank. Sometimes it can be fun to just trade these things with a $20 portfolio and see what happens over time. And yeah, on some of these cheaper chains you can get that done. And yeah, for the SPX token, it's on Ethereum mainnet and it's on Coinbase's Base chain. So if you're doing very small position sizes, you can do it on Base, and if you've got a little bit more conviction behind you, sure, do it on Ethereum. But yeah, manage your position size. This is the key.
I agree.
I think patience was what we initially touched on, Keith, you, with like the institutional buys, right? It was patience. They're a whole lot more patient
Yeah.
than we are. You don't see them jumping in, and this is something that we talk about, right? Is kind of be patient. Don't start chasing after what it is that you see. Kind of like how we tend to FOMO into certain things, or just be afraid that it's running away without us.
And it's
right?
one of the hardest things to teach yourself. Teaching yourself to be disciplined, it just takes it's like muscle memory. It's like working, you have to work out that muscle. And sometimes that means you need to back the fuck away from the screen. Because
it's a hard thing to do, though.
It is a hard thing to do. Listen, this is like, I watch this freaking screen more than I watch Netflix, and it is very easy to get sucked into it. But you got to zoom out from time to time and realize that, some of these little micro movements, hey, if you're a trader and you want to scalp every one of them, then by all means, there's opportunity there. But if you're investing for a longer term position, maybe you want to zoom out a little bit and see what really is developing. And in terms of patience and discipline, probably the most useful thing for me has been to set my positions, my buy orders and my sell orders, before I even click the green button. Determine where I'm going, and if price changes, unless I see something significant that invalidates what my targets are, I don't touch it. If I start making that emotional decision, oh shit, price is going to break out, let's go, boom. It's gonna go up 1% on me, and then it's gonna U-turn 5%. So I just I try not to do that, and I make that mistake from time to time when I see things happening that I think this might be the one, but I'm getting better and better at just sitting on my hands.
Yeah, it takes practice.
Yep.
For sure. So patience, practice, managing your size,
Yeah, because
right? Is another one.
it's
Your
patience,
position.
it's
Hmm.
patience, it's discipline, and above all, it's risk management. If you don't manage your risk, you're not going to stay in this game very long. Simple as
Yeah.
that. You don't have to win every
Yep.
trade. You just got to win more than you lose, and you have to not tell yourself that every losing trade, oh, it's going to recover. All I needed to do is just pop up 5%, and I'm going to be fine. Doesn't More often than not, it doesn't happen that way when you
Yeah.
need it. And if you're sweating it, then you're overexposed.
Right. You know what? We say that often, but I mean, if you take a step back and you really consider, you know what I mean? Like it's kind of a joke in the industry, but it
Well,
is so true.
in
It's so true.
the past week, BitMEX introduced 250% leverage. Read my lip. Don't do it.
Wow. That is
That's
intense.
crazy.
Yeah.
Crazy.
Wow. Well, thank you guys so much for joining me. Definitely to all of our viewers, give the guys a follow. They're both fantastic. Give Material Indicators a follow. Also, it's MI_ALGOS. But also check out like what they actually offer with the fire charts. And I know I'm just kind of shilling it here, Keith. So I'm sorry, but it really is like both of the products that you guys have are really, really wonderful for traders to kind of gain a sort of advantage or an edge, you know, and I think achieve more of what we're all looking to achieve, you know, whether it's insights or how to actually really kind of manage our funds and trade the way we want to. So
Yeah,
thank you guys.
thanks for that, Jen. And for me, it's
Yeah.
just a matter of like, when I'm looking at the candle chart, I'm speculating at where I think at the TA and where I think resistance and support are going to be. We know that I'm a strong believer in TA, but a lot of times it gets obliterated especially when there's manipulation happening. And with looking at the order book liquidity, it takes a lot of the guesswork, a lot of the speculation out of where resistance and support really are because you can see it.
Yeah. And then you can take it and you can create a strategy on carbon DeFi.
Exactly.
Well, awesome.
Exactly.
Thank you guys. Thank you guys so much. I know it's a Monday. It's a little bit off this week because of the travels with the conference, but we will be back next week on Tuesday, regular time, every Tuesday at 3 p.m. UTC. So I look forward to everybody tuning in then. Mark and Keith, I look forward to having you guys back. Thank you so much. And I'm for sure going to keep myself updated, if not through the markets myself, at least through, all of everything that you guys are putting out there for everyone to kind of
No,
gain from.
I appreciate that. Well, you guys enjoy the rest of your trip and travel safe, and look
Thank
forward to doing it
you.
again next week.
For
Sure.
sure.
Awesome.
Thank you so much, Keith. Thank you,
All right.
Jen.
Bye. Cheers.
See you guys.